So, team, I want to apologize. Totally didn't hit the record button this morning. Um, so everything we did on oil and stuff is gone. So I'm going to create kind of a market overview recording right here, place it into the live room recordings where it should have gone anyways. I'm going to try and recreate as much of it as possible. But again, my apologies. Um, we're looking at the ES, and yeah, there's a lot of freaking lines on here that's just messy. But I'm on the 4 hour chart, and what I want to point out is we're still in the premium of this entire leg, right? So this is the dealing range that we're talking about, and we're in the premium still of this. And my eyes are still, even though I feel like we are pushing for this buy side liquidity, I'm still short biased, right? Because we're in the premium, and if I see a short setup, I'm going to take a short setup. However, that being said, we had a great long setup this morning on the 5 minute chart, based on some order blocks that we could have taken easily for a pretty good amount of points. Our eyes were elsewhere, and I'll get into that in just a second. But I'm not saying you can't take longs. I mean, we're clearly trending to the upside. It's just we have made it into the premium of this entire leg, and we get to these areas, the short side should be more dramatic than the long side. Two, we are inside this order block. Price has definitely slowed down and went sideways overnight. Even though we did have a push down to the bottom of it, and it looks like we're pushing back up. We should find liquidity at some point. Today is FOMC. Later today, about 2 p.m. Eastern time, we should get FOMC statements and the funds rate, and then the press conference at 2:30 Eastern. So that will definitely shake the market a little bit and cause whatever liquidity to be drawn to. So we could easily get this and then a push. We could easily come up here, fake us out at the end of the day, and then drop. Either way, we could pop and then continue to pop. It just, when FOMC comes on, all of these lines and stuff absolutely mean nothing. So for the most part. But anyways, on the ES higher time frame, I'm still thinking short. I'm still thinking we come back down here. All right. This was a long stretch to get to this point. And we've been, bearish here. So it looks like we found our legs down here where we opened up the year at, and we pushed, but at the same time, we're in the premium. We're at this order block. We're at the 70% of a fib on this entire leg down. Really just feel like if we end up drawing up here to this buy side liquidity, I'm clearly looking for shorts. But I'm more short biased than I am anything. All right, move into the hourly, get a little closer. This was all yesterday's Monday and Tuesday's action. As you can see, we've had some breaker blocks. We've had all the kinds of stuff, mean thresholds and stuff being respected. It's just really good charting on the ES. It's made this move pretty arduous, but consistent. So on the hourly chart, there's really nothing more that I could even, mark up in here. As you can see all these little 0.5s, which are the mean thresholds or consequent encroachments. And I'll point out the important ones. Down in here, we really won't focus on anything down in here until we start really turning around. So on the hourly, we've got this nice order block right here, turned into a breaker block. So we could easily take the mean threshold of this hourly, which I'm not going to, because on the lower time frame, 15-minute, I do believe that's what this guy is. And we have respected it pretty good. So there's no reason to add another line to the chart. Speaking of the 15-minute, and we do have like a small draw liquidity right here for this high. Do not have that lined out. So that would be shorter term buy side liquidity. I'm going to go ahead and mark that as buy side liquidity. It looks like that's where we're going to. So we get here, and then this is the higher time frame buy side liquidity, the 4 hour. This is above that order block. Let's go down to a 15-minute chart. And again, all of this was yesterday's trading during the day, pretty nasty. And then we had this drop in the afternoon at 1:30. This is the 1:30 algo, that the afternoon ICT kill zone. So we get this Judah swing down, taking out all these fair value gaps. We got into this breaker block and then immediately snapped up, and we rallied the rest of the day all the way to close, all the way to up 10 to here, and then close happened right here. So in fact, the 4 o'clock close would have been right here. But so this was a pretty good run at the end of the day, which created this 15-minute order block. Well, I mean, breaker block. And that's where the mean threshold is. Overnight, we went sideways in the Asian session. This was 3 a.m. The dollar was affected by pound CPI, I think, on news. And then Lagarde started speaking at 4:45, so which was over in here, but that didn't really affect us all that much. So as you can see, we had this nice drop down below this liquidity. Where does price come to? Perfectly respects the mean threshold of that breaker block. Yes, we come all the way down here, but look at where the bodies are. So that's the important part. Started generating some of this right here. Then we popped, breaking that structure, leaving the fair value gap. Could have easily entered a long right there, or this little mean threshold is on the 5-minute chart, I do believe. I think it's a 5-minute chart. And as you can see, perfectly ticked it and then pushed from there. This was a great opportunity for a trade at the beginning of the stream. We had just got on, charts hadn't been open that long, so we didn't get into this trade, but it clearly would have been a really good one. We could have targeted the midnight candle, the daily price line, the 50% mean threshold of this larger 4-hour order block, and maybe left a contract on for this higher time frame. Higher order block, or even the buy side liquidity from yesterday afternoon. That's where the draw is on the lower time frame. So this would have been a really good trade here. You could have gotten in early, probably on a 1-minute chart down in here. So that's really the ES. We're pushing up. Got some buy side liquidity right here, and then also right here. So I do believe the draw is to the upside. So longs are in play on the lower time frames. Once we hit these areas where we're taking out liquidity, then I would expect some pretty drastic shorts, kind of like yesterday right in here. As you can see, look how long it takes for the longs to get where they need to, except for this leg. But look how quickly those pushes are erased. And then you drag out price, push down, drag out price, push down. So this is called high resistance liquidity run. When price takes a long time to get to where it needs to go, that's high resistance. The lower resistance are on the shorts. So, all right. So that's really the ES. And what we're looking at right now is, do we hold this mean threshold and work back down into what's possibly a lower time frame 5-minute order block right in here? Or do we continue higher and go ahead and take out liquidity? So that's going to be where the eyes are. Looking at the NQ, it's basically doing the same thing, right? We had similar price action going on. We didn't get down into this order block like we did on the ES. We just kind of touched the top of it, didn't close below the top of it before moving up. We do have this order block right here as well that we haven't even touched. So this is another, looking at the NQ, this is just another reason why it fits the narrative of having a short bias, because where the ES is breaking these highs, NQ is not. So we're creating divergence there at a premium, higher time frame point of interest. So it just fits the narrative of a short and of being, bearish and having that kind of a bias. So we will keep our eyes on that. I mean, look how quickly we came down, but look how, again, it's more arduous to go up. So just keep our eyes on that and just let price tell us what it wants to do, and then find the optimal trade entry that we can enter the trade on. So that's the ES and the NQ. Now, one thing that we found interesting today, and the main reason why I'm remaking this video, is because we looked at oil this morning and we charted oil, and we're just amazed at how, sorry, my eyes itching. We're just amazed at how price absolutely respected order blocks and breaker blocks. Just absolutely respected it. And I've never charted oil, I don't think, a day in my entire life. Never traded it. Paige, this is for you because you do chart it, but I'm going to be honest with you. This is definitely on my radar today. I do expect to make some type of trade on oil today. But if we go back, let's go up to the 4 hour and just get our bearings, right? So we have a decent little range here. We have even a longer term leg, as you can see. Premium and discount. We are definitely in the discount. So we have some long. We want to look long, although do not discount a short trade in this area. I am perfectly fine with taking a short trade. If we have taken some higher time frame liquidity out, we could definitely take a short. Overall, we're in a higher time frame bearish downtrend. So if we get back to certain areas where we have taken liquidity, then yeah, the short trade's in play, even though we're in a discount in a higher time frame. Same way with the ES. We're in a premium in the ES, but I'm perfectly fine with you taking a buy if the setup is there. So because we are technically being counter trend, then you might want to, shorten up your targets. If you're usually trying to get 5 points off the ES, take 3 if you're going to be going against what the overall trend's doing. So, all right. So let's get back into this area right here. Let's zoom back in to this area and let's just go over what we saw today. It was on the 15-minute chart that we were playing with it. 15 and 5-minute chart. Was it a 5-minute chart? I think it was a 5-minute chart. I'm talking to myself when I say that. Nobody's watching right now. We really kind of zoomed in to this area first, and we just started charting it. So we got this nice order block here on the 5-minute. Let me zoom in some more. And we created the mean threshold. Price grinded its way back up, touched it, immediately broke down. All right. And then grinded its way back up. It hit the daily price line, created this order block, and then dropped down, eventually making it all the way down to this area. Well, why did it stop here? Because of this guy. Creates this order block. This is the move that creates the break of structure. So it starts right here. So this last down candle, this order block, you could even go to the the consequent encroachment of this wick if you wanted to. But we're going to stick with the mean threshold of this order block. And where does price eventually get to? Drops down, rejects it, drops down, rejects it, and then continues higher. Never once closes bodies below this mean threshold. Could have been looking here. We went to even a lower time frame, possibly even found an entry, a couple of entries right in here. Eventually, it basically sets up this guy, which the mean threshold was tapped into and then rejected again. And now we have this guy. So I'm going to consider this to be a breaker block. So I'm going to consider this to be a breaker block and broken structure. We have a fair value gap right here at it. And this is where my eyes are going to be for a target. We decide to take a short right there at that fair value gap, which is right there at that breaker block. Now, where am I looking to short from? This guy right here. I've got an alert set, which we almost tapped into just a second ago. And this is that mean threshold that we've already touched once. So we're going to look to see if it respects it again. We are creating that nice engineered liquidity up to it, which is exactly what we did over here. Tapped it and immediately rejected it. So we have the daily for a target. We have the mean threshold of this order block, which is on a lower time frame. I didn't know we went to a lower time frame. No, it's not. It's 15-minute. Yeah. The mean threshold of this breaker can be another target. So, and then obviously this being another target, this can be another target, this can be another target, which is, no, we're not going to put that there. That was kind of moving. But anyways, that's going to be the trade in which I look at today, like in the next little bit. This is what I'm looking for. Because when you zoom out on the 15-minute, you can see this is all generated. So we have a nice, trend line there that if price gets up into it and rejects, then we can short and we have targets all day and a liquidity pool to get into. If it doesn't reject, here's some buy side liquidity. So we can look for a rejection right there. Now I'll be trading this on the micro oil just because I don't never traded it. So I'm not going to. We did realize that it's $10 a point on the regular E-mini, and that's just a little bit too rich for me, too much for me. So I'm going to trade it on the micro, which is $1 a point, and I can stretch out and watch price action and give myself a little bit more room. So I'm going to trade it on the micro. But just to continue with the narrative, why we're looking at it. Over here, we created on the 5-minute chart. Yeah. On the 5-minute chart, we created this breaker, right? Come down, made new highs, and then we broke below it. So we created this breaker block. And if we scroll over here, as you can see, price comes way down below it, works its way around, creates a new week. We're going to focus on this red line here. And as you can see, price eventually tags it, rejects down. And look at what price action did right before it tagged it. Grinded up to it, touched it, rejected down. Where was the target? Another breaker. Price takes out this liquidity, drops, creates an order block. Price then comes back, slams through the order block, doesn't respect it, so it creates it as a breaker, eventually revisits it right here. So you can see that pattern happening across crude oil over and over in the last, couple weeks. So why not test the waters with something that looks very similar to what we've seen, that we have good, clear targets on? So this is the reason why I created this video. We did all this charting this morning, and we were just amazed and surprised by how well CL respected these marks, these mean thresholds. So I will definitely be keeping an eye on this, and I'll be going live at 8:15 this morning. So I will see y'all then.